Well, welcome everybody to the 2025 market status update. And so we're honored today to have what I consider to be market royalty in how humans use space and capitalize space. One quick note I will mention is I did not realize that to be a member of the board of the Real Estate Advisory Board that you have to own and drive a Range Rover, because everybody here, with the exception of my partner, Chris, drives a Range Rover. So that's what you have to aspire. You end up in a Range Rover when you're older.
That's going to change soon with the new tariffs.
That would change. I've got a Rivian, so I'm American. So anyway, so I'd like to introduce the group. So the first we have the Reina, or the Queen of Office Leasing, Terry Blanca. She's also the king of that as well, so I'll be complete. So we also have the king of building boxes, and boxes is a very productive financial business. So we have Malcolm Butters, the CEO and founder of Butters Realty. So I named this other guy because I know him for a long time, and he came appropriately dressed. So that's Steve Jobs of the shopping center world. Michael Comras, CEO and founder of Comras Group. And then we have, like Disney does dream making, et cetera, the ultimate dream maker of apartment living, Randy Weisberg, CEO and founder of Atlantic and Pacific. And lastly, the Duke of Capital, my partner, Chris Drew, who knows a lot about everything, and that's why I'm just the guy asking questions. He's the guy who's going to be answering. So anyway, so real quick, want to welcome everybody again to the State of the Markets. So we are primarily the Real Estate Advisory Board. We have a guest member today, which is Chris Drew. I would tell you that we are a curious bunch, and we love to get together at our meetings, and we spend probably at least half of our meeting gossiping and about the market and hearing what's going on, et cetera. Really looking to hear and identify status of trends and how the market's performing, et cetera, from each of our different specialties. And we do this within the context of, the broader global, national context, things that are happening, et cetera. So there's nothing better than learning as U.S. students than through conversation, and that's what we're going to try to have today. So it'll be kind of chill conversation amongst a bunch of curious people, and we look forward to your participation later on. So many of us, all of us on this panel, have been probably in this business, with the exception of Chris, at least 35 years in this business. So we've seen just about everything. We've been through all kinds of global financial crises. We've been through financial booms. We've been through zero interest rates. We've been through hurricanes. We're now going through tariffs. Et cetera, et cetera. And the other thing is technology and innovation of technology that has been changing dramatically in our time. So despite all this change, and can you put the first slide up? I would say, you have the slides? There you go. So despite us being in this business for 35 years, I would tell you that at least I feel like somewhat of that fortune teller up there, that I really can't tell exactly what's going on or what's going to happen. But as I mentioned, we're going through an unprecedented level of change, but not only, not the tariffs and economy, but just, how AI, how that might be changing what we're doing. The neat thing about what we all do is that we're all in the real estate business. And at the end of the day, we're all humans, and we occupy space, thank God. And we have to occupy space in buildings, right? And the building might be an office building, a shopping center, whatever the case may be. And that's not going to go away. So how space is used is really a lot of what we're going to be discussing today in each of these sectors. So nobody better than our battle-tested fortune tellers here. So with that, to get started, I'm going to ask him maybe answer in 3 minutes, give and take, 3 questions. So tell us, first of all, what is your business? Everybody knows what the heck you do. 2, when you were in college, did you know exactly you're going to get in the real estate business? And if you did not have a foggiest idea, when did you figure that out? And lastly, all of you are CEOs, leading businesses, et cetera. What's the most important thing that you think of every day when you wake up as leaders? So your business, what do you want to do in college when you were in college, what's the most important thing. So maybe we'll start from the end, Dr. Weisberg.
Good afternoon. Good afternoon. Wonderful to be here. Proud University of Miami graduate. Randy Weisberg, Atlantic Pacific. We build, buy, and manage multifamily apartment communities throughout the United States. With regard to my education, University of Miami, I was a double grad, double major, major in business and bartending on South Beach. Both worked out really well for me. Then I transitioned into banking. And ultimately, yes, I think I always knew I wanted to be involved at some level in real estate. And today, running Atlantic Pacific companies. And I'm joined here by two of our associates, Hannah and Brian. So if you see them, please talk to them, and they can share their path as well as I'd be happy to share mine as well. And the third question.
As CEO, what do you wake up in the morning thinking mostly about?
That's really a question that we think about each day, and it's really simple. It's about the people. I think about our team and how do we create consistency and longevity and create career paths and opportunities for upward momentum. And one of the things we're most proud of is the long tenure of so many of our associates. That's what's most important to me. So thank you.
Very nice, bartender. Chris?
Chris Drew. I run our JLL Capital Markets office down here in Miami. So anytime money is changing hands in commercial real estate, we're involved. So we will either sell the asset or we will capitalize it with debt and equity. I don't know, in any given year, our office will do combined somewhere in the 10 to 12, maybe $15 billion range, depending on the particular year. As a firm, we'll do well in excess of that, closer to 80 to 100 billion in total transaction volume. Publicly traded company. We used to work with a firm called HFF. We were acquired by JLL many, many moons ago. I didn't know anything about commercial real estate when I was at the University of Miami. I didn't have the fortune. I didn't really know Dr. Houston super duper well when I was here. And I was actually fortunate enough to go to a career fair and meet this very nice young lady right here, Terry Blanca, who I looked at and said, and a lot of people have heard the story, I said, there were a bunch of people in the room, and I go, I want to be like that lady, because she just had it all together. People I don't think knew a lot about real estate, so I walked up and started chatting with her, and she explained it to me, and the rest is history. I've had a decent career kind of getting to meet all the folks here, and then on any given day, in terms of leading an office and leading people, I think you're probably going to hear a very similar comment from all of us. I mean, I spend a disproportionate amount of time thinking about the people that we either work for, our clients, or work with us, our associates and our other MDs in the office, and trying to weaponize them to be as good as they humanly possibly can be so that they can be great for our clients.
You can ask Chris later if you play professional football. Okay, go ahead, Dr. Comrade.
Thank you. Am I on there? Nope. Yes? Okay. Hey, guys. Michael Comrest. I run the Comrest Company, and we focus on retail leasing and development. We focus on places where people want to be and what really brings people to interesting spaces. We develop and lease throughout Dade, Broward, and Palm Beach County. Most of the stuff you see is around, say, Lincoln Road or Miami World Center, or right here in South Miami or Coconut Grove. We've been doing this for about 30 years. I went to school down here at the University of Miami. I had Andrea Houston as my professor, I think in her first year of teaching. It was a really great experience. And we've been active throughout these counties over the last several years. And what I focus on every day is really a lot about our people and our strategy. I have, like Randy, probably many of our people that have been with us well over 10 years. And I think that is super important because it's a team process. We all work together, we throw around different ideas, and I think that's all part of the strategy.
Thank you.
Hi, everyone. Terry Blanca. I also graduated from the University of Miami. I actually started in the engineering school. A lot of people don't know this, but I was studying electrical engineering my first 2 years here at the university. And after I finished my last exam, one semester, I decided, that's it. I'm not doing this for the rest of my life. I'm going to go to the business school. And also came back after a short stint in banking to do my MBA. And Manny and I were fortunate enough to be in the same class. So we've known each other for a long time. And I founded Blanca Commercial Real Estate. It's going to be 16 years in April of this year. We're a team of 55. 22 are in our property management business, and the rest of our team focuses on driving value for investors and developers, leasing office space to the right tenants, helping reposition assets, helping create value, and also helping companies find the right office to support their business goals. What do I think about every day? I think about our clients, like Jay Kaplan sitting over there, making sure that we are leaving no stone unturned and that we're doing everything we can to make sure we help our clients be successful in their business and through what we do every day. And of course, our people. Without our people and amazing people, we can't do our jobs. So making sure that we give them all the tools, that we give them all the proper training and support. And like you've heard before, we're very fortunate to have longevity in our team. Many of our team members have been with us 10, 15, 16 years. And even the younger generations that has been joining us over the last decade, right out of school, have been with us 3, 5, 7 years, and more in the making. So really excited about being here with you and having this conversation with my good friends and colleagues.
Hi, I'm Malcolm Butters, president of Butters Construction Development. My brother and I started the firm 35 years ago. A little bit more detailed than just being the box man, according to Manny, but we do, that's right. We do it mostly industrial, been very successful, fortunately, over the last couple of years. And I am also a University of Miami grad, like I think everyone on the panel. And I think I didn't have the pleasure of having Andrea as a professor, but I did have the pleasure of her dad teaching me finance. So there you go. I didn't know initially I was going to go into real estate. I started in the business school, kind of a reverse to Terry. I went into the architecture school in my sophomore year and then realized I wasn't really good at drawing. So I went back into the business school in my junior year, and then I kind of realized my real estate talents are pretty good, and we went from there. When I wake up in the morning, obviously the people, but I'm going to give you a different answer. I think of like just not blowing it, right? I mean, everyone on this panel has been pretty successful, and when I grew up in the business, and Mark and I started our company in 1990, the RTC crisis was blooming. And a lot of developers went broke, a lot of big names. I mean, from Texas, you know, a lot of them, Trammell Crow and others. So I grew up with this fear mentality. So every day when I think up, I'm thinking, where's the industry going? Or like Wayne Gretzky say, where's the puck going, right? Not where it is now. And changing to meet different needs and not getting overextended. Many developers get very hubris. And they get very carried away, and they have overly ambitious. So to me, it's better to be a little conservative and not blowing it. So that's what I think about.
Very nice. And by the way, one thing I'll mention is that we've all been friends for a long time, and we all do business with each other one way or the other. So relationships are critical. Okay, so let's start at the very top, the most thing that kind of puts this whole business together, which is money, capital flowing. So with that, I'm going to ask Dr. Chris Drew to give us a high-level overview of the capital markets and how things are looking. And maybe you can put the other slide up when you have a chance, which is the SOFR and Treasury curve. But go ahead. There you go.
Okay, SOFR and Treasury curve. We'll get to that in a little bit, because the honest answer is that Treasury curve is worth about the paper it's written on, because no one really knows where all this stuff is going. I think the market probably believes that the Treasury, from our conversations, is going to hover somewhere between 415 and 450 plus or minus from a 10-year. But what it does do is it gives you a range-bound value from a risk-free rate so that people can start pricing risk off of that. And why that's important is that you've got $360 billion of dry powder in the closed-end fund space. That's not an all-time high, but it's a lot of capital that has to be placed. And then when you look at the debt transaction volumes from last year, did about 500, which is a good number in terms of transaction volumes, et cetera. I will tell you that it's much lower than the peak of north of 650 in 21. And unfortunately, what we're seeing is that it's hard to pull that capital away from lenders and equity groups. The lenders are much more robust than they've ever been over the last, call it, 3 to 4 years. I would say that over the last 6 months, there's been a renewed interest in trying to get capital out from lenders. Most of them have been able to recycle some of their capital, meaning they've gotten paid back on loans that they made, which is really important. The big catalyst for that has been the CMBS market and the emergence of the CMBS market. 2 years ago, it was a de minimis amount of our capital stack. Now it's come back, and you've gotten hundreds of millions of dollars put into that space, which is really important because people are able to actually pay loans off, securitize them, and then lenders can go and make new loans. So that enables people like Randy and Michael and Malcolm to finance their transactions. Overall, I will say that there is a lot of liquidity in the marketplace. The question is just how do we actually convince people to continue to keep putting it out? So I'm going to be in New York next week, which I see clients out here, Jay and others, that will be happy to hear that we're going to be trying to convince capital to start putting money into the market with guys like Randy and others, whereas they haven't really wanted to develop a lot of new product. We believe that there's going to be a dearth of supply in a couple of years, and they should be developing into that. But trying to convince capital to do that is not always the easiest thing. So the good news is
we
that,
agree.
What'd you say?
We're ready to keep going.
Yes, exactly. So and that's the goal. We have to convince people of that. So almost, I would say, all the largest investors in the market. So think of Blackstone, think of Brookfield, think of GIC. All of them believe that we have bottomed at this juncture. So it's probably a good time to start looking at office. I mean, we had Blackstone in our office today wanting to talk about office, which I got to tell you, that was, lips to God's ears type moment, whereas 2 or 3 years ago, they would kick us out of the room if we brought that up. So things are starting to thaw even in the very, very challenged sectors. And now Michael is the belle of the ball because retail is one of the favorite asset classes again. So everything comes around.
It's taken about 10 years for that to turn around. This used to be.
No one built anything in those 10 years. That's good.
That's right.
So for the rest of the panel, and Chris, you can join in here. How is, how you're seeing the capital world behaving relative to your business, positive and negative? And there is a lot of concern out there that with the tariffs, et cetera, labor costs, et cetera, that there's going to be a lot of inflation. If there's a lot of inflation, the interest rates are going to have to go higher. Yet that forward curve that we just saw there shows interest rates going low, staying low for a long time. So anyway, you don't have to answer the latter part, but tell me, relative to your business, what are your thoughts? Malcolm,
So far, we've had a lot of good luck. For instance, Chris and his team, we did a permanent loan a couple months ago on a warehouse, and we had a plethora of offers to do permanent loan. And then on the construction loan, we're doing a big project now in Boynton, so it's about 500,000 feet. And Bank of Montreal stepped up, did a $70-something million loan, and let us do all specs. So, I think for us, it's a little different because we're willing with our partners to guarantee. And if you're willing to put your name on the loan, I think you have a lot more options. So there's some developers that don't like to do that for obvious reasons. But, if we have a low leverage, we have a lot of conviction, and you could put your name as a guarantor, I think there's a lot of options out there.
That's fairly unique. Spec industrial and you're signing guarantees, so that's great. That's a powerful developer.
Yeah, again, we have great partners, and we have a lot of confidence in our team. So, when you have a project now, and Chris and you guys know, the leverage is maybe, it's 60% leverage maybe. So it's 40% equity. So that, I just can't fathom to see where in this market, values fall, given the lack of land in Miami and Broward and Palm Beach, where values fall 40%. So,
Terry, capital?
You know, in office, it has been really interesting because we are sitting in Southeast Florida, a market that generally speaking has outperformed many cities around the country, especially Miami in particular for certain major submarkets has been just the shining star. So we've had continued rent growth across these submarkets for the most part, and that certainly has supported developers and investors that bought property 4 or 5 years ago and suffered through the hike in interest rates that was so fast. And so there's distress, but there isn't asset distress, right? There's distress from a capital standpoint because they haven't been able to replace the debt at the level that they had placed on these assets. So thankfully now we're seeing trades that are pretty healthy and new lenders coming into the market, whether they are funds or they are traditional lenders, starting to come back in. But typically, these owners that are not well capitalized will be stuck. They're going to have to sell, wipe out equity because there's not enough dollars at the table to be able to take out the entire capital stack. But as it relates to the office itself, the asset itself, they're performing really well with occupancy and good solid rents.
Similar to retail, I mean, you guys are
Yeah,
kicking butt.
for sure. So I would say from a capital market standpoint, we took a project which I had built over on South Beach for Target in Burlington and University of Miami for one of their health centers. We built that during COVID. And as we came out of COVID, there was not a lot of financing. We looked to get the project refinanced off its construction loan all through 24, and all they did all talk about in 24 was how the rate was going to be cut. How many times? 6 times?
Yeah, I think so.
And then by the time November rolled around, I was really out of time and I couldn't wait any longer. And 2 days before the rate cut in November, I ended up locking my rate. And of course, you know, you sort of think about locking rate right before a rate cut, which is pretty much programmed in. But I did because one thing's for sure is the short-term, it's a short-term rate, not the longer-term rate. But what happened 2 days after when they cut the rate, the interest rates went up. And I fortunately was able to lock in my rate for 5 years at a 5.4% rate, which today is irreplaceable. I can tell you a lot. I've been fortunate over the last several years when interest rates were super low and we were generating a lot of cash flow to be able to pay off a lot of the debts on the properties. That way I didn't have to listen to a lot of the banks when it came time for this, you know, what was going on in the world with these loans rolling over. And you don't know until the banks are becoming looser like they are today. You didn't know whether you could refinance or how much you would have to put in order to effectuate the refinance. So this is it's still not there yet. We're looking to capitalize a couple of projects right now, but I would tell you that the cost of debt and the spreads is still very high. Equity costs are still very high, but you have to have product type that people want and locations that people want, and you know we've been pretty successful in achieving what we need to do.
He's in a sexy business now, retail, which we'll get into in a minute more. Dr. Weisberg, Mr. Apartment, your thoughts?
Yeah, I'd like to agree with Michael and Malcolm. Financing the capital stack is really difficult right now. But to Malcolm's point, very well-heeled developers with strong balance sheets who are willing to guarantee loans. So we'll bookend this. We do the same. I would say every month we're closing at least 1 or 2 loans, whether they're new developments or refinances. And guarantees aren't something that scare us off. But for that, we get better pricing and we demand better pricing. One of the things that we're seeing in the marketplace right now is kind of a missing middle where you have debt and equity not quite bridging enough of a gap. So this year, Atlantic Pacific launched a credit partners platform where for like middle market, we're coming in with slugs between $2 and $5 million to bridge the gap where traditional financing can't can't get there. And I can tell you that the inbound traffic of new deals to underwrite has increased from, I'd say, the first month of January of this year, 3 or 4 deals coming in a week. We're now at about 7 to 10 deals a week, and the pace and velocity continues. And so this is what is inherent and important for guys like us and for everyone in the room is, you got to find where that opportunity is, and we think this is one of those places.
So Randy, you guys are moving from equity to debt to so-called private credit, right?
When it's convenient.
When it's convenient. Yeah. And maybe one other quick question for the two of you that like to sign guarantees. How much do you save in spread when you sign a guarantee?
I don't know so the loan that we're just signing up now, we are floating at 225 over SOFR. So I don't know, I'll ask maybe Chris. So if it's probably 50
You're saving
basis
50 basis points.
50 basis
Yeah, plus
points,
or minus.
right? So again,
They
a
need to
lot
do more of their loans, though, clearly. I mean, it's like,
So probably you're saving that. But again, I think, the banks are also willing to do several. So if you have other partners and you split it up between us and the partners, it's not a big risk factor for us, at least.
All right. So the next topic, we're going to go into office, but I'm going to twist it around a little bit, going to the other thing. So as a result of the pandemic, a lot of things changed, and office became the punching bag. And Terry, you were super bruised, but you fought through it. But in certain office markets, rents, thanks to the pandemic, doubled, and occupancies went sky high. Brickell is probably one of the greatest examples. And then others, it plummeted. And so what are the after effects of the pandemic? And I will give you one quick little story. I was on the phone with a friend of mine today in Nashville that owns a little hotel, and she was saying, Manny, the restaurants are all closing here in Nashville because the rent's gotten so high, right? And this is her perspective, right? But rent, everything got super, but a lot of things are doing really great, right? So what's the after effects of the pandemic as we sit here today, and what are you guys going forward? Maybe we'll start with office.
Yeah. So yeah, the demise of office was grossly exaggerated, right? I mean, I think the saying was survive until 25 or something like that. Well, we've survived and more than survived in this region, and particularly Miami. So the outcome has been that I think most businesses, whether they're large corporations or smaller businesses, are now adapting to the new norm of, yes, it might be 4 days a week in the office or 5 days a week in the office, but with flexibility. So there's a lot of flexibility when you say, yeah, everybody's back in the office. Well, there's a lot of flexibility if people need to have certain things taken care of from a personal perspective to be able to have a little bit of hybrid work incorporated. But what definitely got exaggerated post-pandemic was what had already started in office, which was the flight to quality. So today, no doubt, if you have a quality asset in a great location that is connected to the right amenity base, whether it's food, restaurants, a vibrant, energetic, surrounding mass transit, oftentimes also comes into question, and a building that has been either recently renovated with the right amenity base of conference centers and a golf simulator, or what have you, all the fun things that we all want to have at our fingertips, and services available so that you can kind of do the rounds during your day to get things done efficiently. So those are the buildings that are winning and are experiencing tremendous demand and tremendous rent growth. So to put it in perspective, we break up Class A in Brickell and downtown into Class A Tier 1 and Tier 2. Tier 1 being the most trophy assets, the most well-positioned in terms of renovations and amenities. And those assets in Brickell are commanding rates today of $113 a square foot. And the vacancy level is sub 10% at about 9% this quarter. We just looked at the stats. The rest of the market overall in Miami-Dade County has benefited from this back to work and the rise of rents in certain submarkets like Brickell. And we currently today have one of the highest weighted average rates in Class A space than any other city in the country at over $60 a square foot. So it has helped the entire office market. The Brickell performance has helped every other submarket in the county continue to perform better. There will be movement, migration of tenants out of Brickell that will say, I don't want to pay $110 a square foot. So they'll move to Coral Gables, and that is happening. Coral Gables is killing it this year with 145,000 square foot lease consolidation for City National Bank at the Ponte Gadea building that Bacardi is vacating because they're going to the plaza. A 60,000 square foot lease by Nicholas Children's Hospital at Columbus Center, just north of here for a medical facility, an expansion of their healthcare practice, and on and on and on. So migration will happen to areas where executives feel that they can continue to attract and retain talent, where it is convenient to reduce the commute time, but in neighborhoods that definitely offer that 360 holistic approach to life, making sure that we are able to access all the benefits of an urban community, even if we're not in Brickell or downtown. So I see densification happening across neighborhoods throughout the region, continued expansion of office in these areas where it makes sense because executives and their employees reside there or nearby and can be accessed within a 30-minute, 45-minute commute time, and areas that are continuing to provide the services, again, and the convenience that we all want, for, including schools, et cetera. So, Bay Harbor is performing really well. We're leasing a project there for Dave and Martin, and we're getting $100 triple net rents and more, and a 98,000 square foot office building that has all the amenity base. You have other projects on Las Olas that we're now leasing that we expect where rents are going to continue to push, a good 10% increase over where it may have been 2 years ago or a year ago. And we suspect that trend will continue. And going back home, if there's a pandemic, I don't know that that's going to happen ever again.
Yeah.
But if it does, we know that the office is going to continue to exist, right?
Yeah. And it's amazing in South Florida. We are the best market in the country, et cetera.
Yes.
And we're selling distressed debt in Orlando at $60 a foot and 14 cap rates too, which is amazing. Dr. Comrades.
Yeah,
during the
I want to
pandemic
just
and
to
post
build.
where you're at today.
Well, I just want to build on what Terry had said. In Coconut Grove, where many of you are familiar with, we redeveloped Coco Walk, and Coco Walk started out as 200,000 square feet of retail and entertainment. It got a little long in the tooth, and just prior to COVID, we decided we were going to tear down 50,000 feet of unproductive space and build a 100,000 square foot Class A office building in the heart of the Grove. At first, it sounded great, and then COVID hit, and we got a little concerned, but we built right through it, and we reopened up Coco Walk a few years ago now, and it was 100% leased upon completion. More recently, we took a building directly across the street, which was occupied by 24-hour fitness and a Shack Sport Club, and I couldn't lease that space for anything. And I decided, based on the success of the office leasing in Coconut Grove and the demand within the Grove, that I was going to convert that space into boutique office space. So I did that. I pre-built the entire space and was very successful in getting that leased. Terry had leased one of the spaces to Acor Capital. And we achieved rents upwards of $100 a foot in Coconut Grove. And what would have been considered a Class B retail property, we converted into what is now a very cool boutique building. Has some great art in the lobby and a very exciting atmosphere. So I think, as Terry said, certain submarkets are really crushing it, and I think the Grove is one of those.
I mentioned earlier that these guys were fortune tellers, but I meant fortune because they've been making a fortune. So let me ask you, Dr. Randy Weisberg, when the pandemic came in, all these New Yorkers started moving in, Californians, et cetera, and there's a lot of apartments that have been built, and rents went up a lot. So give us your perspectives, where we're at and where we're going on the apartment side.
Yeah, so from a multifamily perspective, just immediately post-COVID, it was, let's talk about revenue and expenses, right? So on the revenue side, rents unbelievably skyrocketed, and the correlation with values skyrocketed. So in the multifamily business, if you were buying in 2023, you spent a lot of money, and you've got a pretty big headache in 2025. And if you were selling in 2023, you're probably not sitting on this panel. You might be sitting on the beach. And then on the expense side, there was a problem with bad debt because a lot of renters weren't working during COVID. They weren't paying their bills, and the states and the agencies had a very favorable tenant-friendly perspective. It's kind of coming a little bit back to the mean right now, and right now you're seeing values kind of flattened out, but we do see a trajectory because of, and we'll get into this I'm sure later, construction costs and interest rates and the rise of everything, that there's going to be a stall out of more new starts. And so later, and we'll probably get to this, a little bit later, 27, 28, rents are going to start skyrocketing again, and inflation's going to hit that segment of our economy, for sure.
So, hey, Randy, during the pandemic, people started obviously working from home, so they needed more space in their apartments, so more dens and all that kind of stuff. And now that people are going back to work, have you changed your mind, your approach as to how you design apartments, or bigger, smaller, or whatever?
Yeah, for sure. Well, smaller units are on the rise because of the construction costs. So that was served up to us. For example, in a development that will be leasing out probably end of summer, moving people in September, in Overtown across from the train station, we've got 6 what I'll call officettes. And so these are opportunities for people to get out of their smaller spaces and work within their building, not at a coffee shop, and have privacy and security. And so, yeah, I think that's an amenity that is critical and the future of multifamily, for sure.
Super neat. A lot of change in that regard. So, Malcolm, you were the other poster child on the upside during the pandemic with industrial. So, right? And by the way, there was, what is it called? Supply chain issues, et cetera. And now we might be dealing with similar issues. So why don't you give us your overview, where you were, where you're at? And
Yeah, like nobody probably benefited better from COVID than the industrial sector. Maybe a little bit of multifamily, but industrial was pretty much just a sleepy sector. Pretty much like Manny said, a lot of boxes. But when everybody started staying home and everyone started ordering online, then you had Amazon and Target and Walmart started ramping up. And so the industry went in the United States from building roughly 300 million square feet a year of industrial to 600 and 700 million square feet of industrial. And that went on for a couple of years. Now, what's happened is we've come all the way back down. So now we're back to normal. Absorption is normal, 200 to 300 million square feet a year. And rents, though, similar to what Terry said on the Class A office, or what Randy said about apartments, they doubled. So rents went from maybe $7, $8, $9 a foot to $14, $15, $16, even $17, $18 a foot here in South Florida, triple net. So it was the same. A lot of shock, a lot of tenants upset, because they signed a 5-year lease, and then 5 years later, their rents have doubled, which is not, typical of it. But I think everything's back to normal. So there's a little bit of an overhang in our sector right now. But again, similar to office, the good markets like Miami and South Florida are still under control. You get into secondary markets in the South, let's say in Florida, it would be like Fort Pierce or Port St. Lucie, a little bit of an issue. Ocala, an issue. But, Tampa is still very hot, and South Florida's hot. So we're really excited. In COVID, one of the good things in COVID is there was a lot of Class C, nondescript offices, and we've already taken 2 where we've knocked down the offices, got a rezone, and put up industrial. And there's one in Tampa now. We're kind of doing the same. So, it's been, for our sector, it's been a little bit of a benefit.
so Malcolm, there's small bay warehouse, there's bigger box warehouse.
Right.
and maybe you want to touch on that because the small bay is like the business owner and how are they doing, and
Yeah. So, obviously during COVID, a lot of big box deals. And what does that mean? People talk 200, 300, even 1 million square foot deals got done around the state. That segment has really come down a lot. So the bigger box deals are not as prevalent. What's now thriving is a lot of medium-sized deals. So what does that mean? 3,000 to 25,000 square feet. So average guys, and we're doing a big project now in Fort Myers, next to the airport, probably the biggest park there. That sounds a lot like Donald Trump. It's the biggest park there.
you're gonna do a little dance for
It's
us, or what?
unbelievable. It's unbelievable.
Really good, by the way.
So we have like really good tenants, Rivian being one of them, but it's 20,000 feet. Ryder Truck being another, 15,000 feet. So we're still a lot of good quality companies, but definitely smaller tenant sizes, yeah.
That's super cool. So let's talk a little bit about all the news that's going on with trade and cost and labor availability, et cetera. So we're dealing with all that, and there's a lot of perception that inflation is going to be here, et cetera. So how are you guys dealing with it, Randy? How are you thinking going forward in terms of building if you really don't know where costs might be, or maybe you do? I don't.
We don't. There's an old adage, not to time the market, but to spend time in the market, and that's always been our philosophy. We want to be consistent. One of the things in our organization that we do is we provide housing for multiple sectors. So everywhere from low-income housing to affordable housing to workforce housing to luxury housing. So, today providing affordable housing, workforce housing, low-income housing, tax credit housing is a more robust portion of our business practice, and it keeps us busy. But yes, interest rates are difficult, construction costs are difficult, the uncertainty of tariffs are difficult, but these are things that, I like to say our crew, the guys and gals in our shop, they're Rubik's Cube solvers. They're constantly solving problems. And that's what you all have to think about. How are you going to come into an organization and try to help solve problems each and every day?
Michael, you want to address a little bit how you're seeing that in TIs, capital, all the changes going on with cost, labor. Or if you want, you know what, we can skip that.
No,
I want to talk
so
about restaurants.
I would
with
tell you that, obviously capital costs are tremendous. TIs are tremendous. The cost of building out spaces, vanilla boxing spaces, everything has just gone through the roof. And there is, while supply has definitely been more readily available, there has been no discount in pricing. So, when you're talking about building out space or speccing suites, you just have to believe in your gut that you're doing the right thing and making the right deal. You have to really count on your tenants, look at your credit, look at how the tenants are doing business. But I think the tariffs cause huge concern. I think, from an interest rate standpoint, how do you peg interest rates until you know what's going on with these tariffs? And I just find that really super challenging right now. But we are hoping that it will settle down. If this is actually true, where things are sort of flatlining and people can actually get pricing around that level of risk and understand what that's going to do, we'll see a lot more transactions happening.
So Michael, there's a lot of restaurants like at your Cocoa Walk, great restaurants, a lot of them, but it costs a lot of money to put in a restaurant. Maybe you can give us an idea of how much it costs to put a restaurant in, and how do you judge making that investment versus it's a restaurant?
Right. So I would say restaurants are extremely risky businesses. The ones that are successful really deserve to be successful because all of it's fraught with disaster every step of the way, just from getting a lease done to getting permits to getting construction costs, getting built. Restaurants today, if you're going to build a 7,000 square foot restaurant like call it a Komodo or one of these new restaurants, it's going to cost $1,200 a foot, maybe $1,500 a foot
And
to build
who
out.
pays that?
What's that?
Who pays that
Mo-
1,200?
Mostly not the landlords, unless it's more of a management type of a deal. Landlords could be asked to put in for anywhere between $100 a foot to $250 a foot. But as a percentage of the total project cost, it's really not that much. We've had a lot of restaurant growth down here over the last several years, and it's impossible for all those restaurants to be successful. Even at Cocoa Walk, where we did, I thought, a really great job bringing in a variety of different restaurants, we've had some casualties, but they were quickly picked up. I mean, one of the things that's super interesting about South Florida is that there's no space. Right now, there's no space, and in most of the submarkets that we work in, there's no opportunity. So, like today, when you see tenants that are going out of business, or you read about the Forever 21 closing, or you read about Party City closing, or Joanne Fabrics closing, I mean, go look at their locations. I mean, Forever 21 is right at the heart of Lincoln Road. I happen to be the landlord there. We have several tenants that are looking to pick up that space. When you look at the Party City right here on South Dixie Highway, that's front right on US 1. It's, one of the more desirable spaces that are coming available. Or if you go over to the Greenery on Kendall Drive, where you have a big Joanne Fabric right at the front on Kendall Drive, these boxes get snapped up like that. So, while people talk about all these businesses going out, there's plenty of backfills, and I don't see that stopping.
Great market. Malcolm, you're a contractor also, right?
Yeah.
So what are you seeing how are you projecting costs of building your buildings?
Yeah, so I think, look, this tariff issue is a big thing. Some people sweep it under the rugs, but for instance, today we were in our office, we had a fire sprinkler contractor, pretty nondescript, right? Fire sprinkler pipes are made out of steel. So he's telling me he's predicting prices for fire sprinklers are going up 10%. Most of the cement, concrete, most of the cement comes from Mexico, or a lot of it comes from Mexico. So, to make concrete, you need cement, aggregate, water. So, it's a big component. You keep going down the list, steel, of course, aluminum. So to me, it's going to be a big problem. I think we're going to see construction prices over the next year probably go up 5 to 10%.
It's a big number.
It is a big number,
And
yeah.
will rents follow, right?
Well,
You're leaving me, Randy, thank you.
Well, because, everyone is predicting, inflation's coming down, and like Chris and Michael has said, if inflation stays low, then rates stay low, right? Because then the Fed could keep lowering. But if they can't, and the other component is labor, right? We've now reduced immigration. So there's less labor availability for Michael's restaurants, for, construction workers, for everything else. So to me, I think we're in for higher rates for longer. And I think on a construction cost basis, you're going to see an increase this year, much more than we had the last 2 years.
So for us in the investment business, we look at replacement cost, and replacement cost seems to be going up. So we make that comparison sometimes. So Chris, you want to touch on that, and how does capital look at that?
Yeah, I mean, at the end of the day, I think every investment that folks are making, they are uniquely focused on replacement cost. Manny made a comment about office, and if you can build it for $800 a foot and buy it at $150 a foot, maybe it works right after you put another couple $100 in TIs, et cetera. I mean, when we're looking at value add multi acquisitions, the first question is always, all right, what's the discount to replacement cost? Someone made a comment recently. I was in a meeting, and they said basically basis is what determines your success on the deal, because it allows you to toggle your competitiveness with other assets in the market that you may be competing with. So if one person's basis is $250 a door and the other person's basis is $400 a door, like you're renting at much different rates. So I think that is like front and center what we are focused on today in terms of trying to get deals capitalized and trying to push them to investors.
Right, because if costs go up, people are not going to be building as much. Randy, I see you smiling. What were you?
Yeah, I think when we came up through the system, location, location, location. That's what our parents told us. That's what our professors told us. And for me, the way we run our business, it's basis, basis, basis. And that's music to my ears, because that's how you can transact, because time can usually alleviate much of your problems.
Come in at the right basis. Yeah. Great point. Great point. Okay, guys, so we're about to be replaced by AI in about 2 minutes. So we'll just disappear. You'll see some memes or something here. Okay, let's go down. Are you using AI? Do you know how to open ChatGPT?
I do.
And what are you doing in that regard? Have you replaced your lawyers with a computer? So, Dr.
No,
Butters.
I would be probably the last person to ask a lot about AI, but
You know how to spell it?
yes, I think it's capital A and then maybe a small I don't know. But so look, I think one of the exciting things that's going to happen, though, what I could see happening to me, which is going to benefit all of us, is permitting. I see a scenario where we are going to, because we already submit plans to building departments electronically. And I could see not too distant future where we submit the plans to the building department and the whole set of plans is reviewed by AI. So rather than having, Joe Schmo review it and it takes 30 days to review it, the machine will review it, and within, whatever, an hour, they'll give you back all your comments. And that is coming.
That is a great idea, and then you can get Elon Musk to come in and fire everybody in the permitting department. The city of Miami, if they could start there, please.
Yeah.
But that's real, and I know some
That-
students in UM are working
Yeah,
on that.
that's going to be. So, in our business, again, you still need people to build it, still need great people to lease it. But,
don't
that's
need-
the one.
Yeah,
we don't need Terry?
No, we don't need government employees to review the plans. Let's let the computer do it. That's a great point. Terry?
Yeah.
Yeah, so listen, I'm really fortunate to have a lot of 20-somethings on my team, so they keep us up to speed on everything that is happening. Ella's here, she's our ChatGPT expert, and it's a great tool, and I'm super excited about it, right? Because it gives us opportunities to do things a lot more efficiently, streamlining processes, creating podcasts out of our Miami Market Report or Broward Market Report without having to, tape it. You put in the report, it actually generates a conversation, which is 95 or 98% accurate, right? I mean, you really hardly have to tweak it. And but the most exciting thing for us is we're really crazy about analytics and data and making sure that we can provide our clients information that allows them to make good decisions for the future. And with these kinds of tools available to us, now we can pull information from a lot of different sources, and we can massage it easily. We can produce forecasting reports and provide intelligence that otherwise would take us hours and days maybe to produce. So that's where we're investing our dollars in trying to streamline and to create just a platform that aggregates information from a lot of different sources, and then we can put this out for our clients' benefit.
Great. Michael?
Yeah.
And to me, it's all about efficiency, and I use ChatGPT as often as I can. As every time I think about really trying to find something, and just doing research and just being more spot on. And it's not perfect yet, but you can certainly see where it's going. And
See it in your retailers?
yeah, I see it. Yeah, I'm sure every retailer is looking at that. I mean, when you're certainly, we talk about the COVID and we talk about the apocalypse, retail apocalypse, and whether or not the online retailing, and of course online retailing needs to be supported by the brick and mortar, and a lot of these tenants are absolutely looking at all of these details of where's the packages going, how is it getting there, what's the timing, who's my customer, how do I get the customer in the store, and the ability to exchange, the ability to go to the store, touch it, feel it, order it all, when you go home. So I really think that the efficiencies that the retailers will experience through the use of AI will be huge. Fortunately, having a robot go show space and explain why this area is better than the other area, and I think we still got a couple of years left doing what we do. So I'm excited about that.
Super. Chris?
So I have a question. How many people are recording this conversation on their phone right now? Okay. So what program are you using? Otter. Exactly. So do you know Hugh Chen? No? Okay. So I was sitting with Hugh yesterday, and he was telling me about this program Otter that literally will record this entire presentation and then put it in bullet notes for you so that you have all the notes from these meetings. That's AI. at JLL, we're spending, Mandy knows the exact number, but we're spending a tremendous amount of money on AI. We have JLL, GPT, and it's all about data. And the problem is that what we've realized with AI is that if you have bad data, you end up having a bad output. So we have more information than anybody, because think of all the quotes we get, think of all the bids we get, think of all the conversations we have, think of all the things that we go to meetings and we record, and we dump it into Chat GPT. And we realized that the actual data that we were putting in wasn't good. So then we had to hire a bunch of people to scrub the data. It's really laborious. With that being said, we're 180 days away from having probably the most robust debt intelligence platform in the country, scrubbing all that data so that when clients call us and say, where's this going to price, I just look at it and I have a Bloomberg for debt. That literally is like pricing real time because we're getting all the data. I think that it's about efficiency and it's about customer experience, client experience, and providing people with the most relevant, up-to-date information possible. So I think AI is an absolute game changer. You maybe have 2 years. I maybe have 6 months. So he's more valuable because he has to know the true intricacies. You know, if you're asking for just where are things pricing and how do you get it done. And by the way, if you're a lawyer, I was sitting with someone in Atlanta last night, and this is not news, but they are writing a program that will make loan doc comments, will be able to negotiate term sheets, and all of that is going to be pretty automated to get us 95% of the way there.
All right, we're doing all our lease abstracts now with AI, right? And by the way, did you see how Chris did a generational move on us? He started by saying, oh, this software, Hugh Chen or whatever, trying to make us look old. Randy.
Good job.
I know you.
We talked about having my midlife crisis earlier, so you know.
So yeah, I think we're all going to need to embrace AI at different levels. I'll give 2 anecdotes. So similar to Malcolm, we self-perform. We're our own general contractor here in South Florida and all throughout Texas. We've seen previews of an AI software program that, so contracting is all about scheduling. And so we've seen this software program that basically we take our superintendent, they strap on a camera and they walk the site, they download the data, and the inputs that come back tell us how we're off schedule, where we're off schedule, and where we think we can save time if we do A, B, or C. Wow. So I'm not sure it's perfect yet. We're not going to be the leader in that technology. We're going to follow it and make sure that other folks make mistakes with it, but we're interested. And then, you know, to me, financial analysis, you know, I've always given advice to students, to my own children. By the time you're 25, you need to come out and you need to be an Excel ninja. I think I'm not going to really say that anymore. I think you're going to need to understand how the Excel outputs happened. But I think, and this is it's tough for me to understand, I think as young people in the workforce who are not going to go through, you know, the Excel hell that many of us have gone
Argus,
through,
for that matter.
or Argus, you know, I think you're going to have to figure out how those inputs worked and why they worked, and you're going to have to put a little extra critical thinking into it. It's not just that AI is going to do your homework for you. You're going to need to understand the hows and the whys, and I think that's going to be the differentiator going forward.
Yeah, and I'll mention that we had a number of interns this summer, and we had like an AI session with them. And Adam's here, one of them, and they blew us away. They knew so much more than we did. So, so super interesting. So we're coming here to the end of our part here. So I'm gonna ask you a 2-part question. So, one, what do you see as an investor? You would say as an investor, the biggest opportunities where you think you would be looking into for the next 2 years? And that, by the way, can include federal properties, because I know a lot of federal properties are being sold. But so the best opportunities you see in the market for the next 2 years. And 2, what is the advice you would give to the students who will be coming out into the job market, et cetera, and how should they be best prepared for going into the market? So opportunity to invest and recommendation to students. So I want to jump it around here. So Dr. Comras or Steve Jobs, can you please?
So I think Miami is really a dynamic market, and we have so many emerging areas that continue to evolve. You know, just a few years ago, Miami World Center did not exist. Today, if you haven't been by there, you should go check it out. We just finished leasing 250,000 square feet and opened up a brand new Apple store, 15,000 square feet. It's really amazing what's going on over there. So, infill development throughout South Florida is huge. We have the areas that you hear all about, Wynwood, but Alapata, then you have Little River, Little Haiti. There are just so many emerging markets and infill markets around here that I would stay focused on. I think as a student and coming into the market, my thing was really making sure that I understood as many aspects of real estate as I could in my early years. Because while you want to be an expert in a field, if you don't understand how all the pieces come together, it's very hard to manage that process. Everybody says, I want to be a developer, and yeah, you do. I think it's pretty awesome. But if you don't understand how all those pieces come together, you're going to be missing something. But I do believe you should be an expert in something.
Randy?
Yeah, I think for the future, I think two acronyms, public-private partnerships and transit-oriented developments. Being focused and having a team that knows how to work with the public sector is paramount to success because of comments like Manny has about the federal government, but it's the states, it's the municipalities. They need us to provide, in our world, housing. And transit-oriented development, for the obvious reasons, there's just too much traffic on the roads. Miami is a young city compared to New York, Boston, Chicago. Our transit system isn't what it needs to be. It may or may not ever get there, but living near and around transit-oriented properties, that's going to be the differentiator. As it relates to any advice I could share with you, you're doing it. You're doing it today. You're here. You're showing up. Andrea would knock me over the head if I didn't say show up to the Impact Conference. Show up, ask questions, be curious, be thoughtful. And my wife, who's here today, who went to law school, who told me when she was in law school, they said the adage of look left, look right. The people on either side of you aren't going to be there. I'm going to tell you the opposite. Look left and look right, and be kind to the person next to you because they're your class. They're the people you're coming up with. This is our class. We've all known each other for decades. We've worked together. We've transacted together. We've helped each other. We've been on the other side of each other. We've been partners together. We've sold deals together. We've bought deals from each other. It's about rising the tide. And so being here today, I congratulate you. That's the first step.
Very nice, President Weisbert. Well done, well done. Terry?
Yeah, well, Randy stole my thunder because I do believe that there is a huge opportunity to partner with governments around the entire region and Florida at large. There are so many city centers that need to be revitalized, and we're seeing it as we speak throughout Hallandale Beach, whether it's Boca Raton up in Palm Beach, or Flagler Village. That's private, but you anywhere you go, whether it's Homestead or whether it is downtown Miami or whether it is Key Biscayne, there are opportunities to partner with government to create densification that is really responsible. That brings together, again, all the elements that we all want to enjoy as human beings, right? I mean, the physical space, as Manny started saying when we started this conversation, is, defines our lives every day, whether it is your apartment, your home, your office, where you shop, where you go to work out, where you go to the doctor. And so I think it's really important that the places that get built for the future are designed to adapt to what our needs are. And so government has a lot of underutilized property Many companies have underutilized properties, and we're seeing them sell their campuses as well, just like Assurant leased 80,000 square feet at Waterford Business District, where they're coming out of a campus that was built 40 years ago or 35 years ago by American bankers that is, 50 acres? So, I mean, so it's massive and totally obsolete, and like that, you'll see a lot of private enterprises will sell their properties, Ryder did, and others are doing the same thing, giving opportunity for development that makes sense for the future to occur. So great opportunities all around. Advice to all of you, relationships matter, right? So whether it is, like Randy said, your classmates, your teachers, your professors, I had someone that taught me, go into an elevator and always leave the elevator knowing who you are with in the elevator. And it's a great lesson in understanding that we all want to be recognized, we all want to know who we are, right? And a good morning and a good afternoon and a pleasantry goes really far. It can change somebody's life, and they'll remember that. So just be aware of who you're with and make it a point to build those relationships, because over your lifetime, you'll find that all of a sudden they come out of some nowhere you hadn't expected, and that person is the one that is going to help you advance your career or help you personally in whatever need you might have.
Malcolm?
Yeah, just to keep going with Terry's theme, but I think, higher education, getting your master's would be great. What Randy said, networking, whether it's ULI or NAIOP, get out there. Play the long game. Don't be this bully, this cocky person. Be nice, right? Be nice. The nice guy wins. You don't have to be this tough guy all the time, because, and don't screw over people, because, it's your reputation. Like, we've all been here for 40 years now, and it's really important. Opportunities, on the industrial side, there's definitely going to be, like Terry say, redevelopment on American bankers and things like that. I think for us, it's going to be trying to take, there's not as much big parcels of land in South Florida. So to us, it's trying to knock off, the 5-acre sites that in redeveloping those probably. We have a couple we're looking at up north, and also looking outside of South Florida, whether it's Naples, Fort Myers, or Tampa, a little more land, a little easier to develop.
Thanks, Malcolm.
One last thing, medical office buildings. Oh my God, they're in such bad shape, most of them. Medical office. Just find good property to repurpose for great medical office that makes sense for the future.
Right.
Most are so decrepit.
Let me say one thing. We've done a couple minutes. If you do business with doctors, you will not live long. They are the worst people, the worst business people, and they're cheap. Am I right, Terry?
I started my career in leasing medical office buildings, so
They never wanna
I
pay.
get.
They're not going to pay $100 a foot. Maybe.
No,
Maybe
but
Citadel.
they'll pay 60.
That's a great point. All right, Dr. Drew, he runs a culture presentation. There'll be 2,000 people listening to Mr. Culture over here. So go for it, Mr. Culture.
We can dive into culture. Randy's comment was sensational, by the way. So that's probably the best thing that you'll get from this entire conference. I would tell you, I think from an opportunity side, actually, we need.
Can I ask a question? Did that get recorded? In
Right. Yeah. We actually need schools. So I keep begging funds to come down here and build schools, K through 12 schools that are high quality, because it's actually, if Miami needs to grow, executives don't really have places to educate their children. So we really need that. I would do it, but I have too much going on in my day job. You guys should do that. And then the only advice I would give is, I think there's two things. One, get involved with some type of a charitable organization. A lot of people talk about wanting to give back, but they don't actually want to roll up their sleeves and do the hard work to help their community. And when you do that, you're going to meet people that tend to be like-minded, and you can have some level of a passion together, and that's how people bond. And then try to be really good. Try to be excellent at something, whatever that is. So when we interview people, one question we always ask them is, have you ever been exceptional at something? Because if you've been exceptional at something, then I know that you know the amount of work it takes to be really good. And most people look at me like I'm crazy, but every once in a while someone's like, oh yeah, like I was a great pianist, or I was great in this sport, or, I was amazing academically, and let me explain to you what it is. And those people tend to work out. They may not, by the way, they may not be the right fit for us. They tend to be really good, then they go on to do something even better. So try to be exceptional, and by the way, it can be in a charity, it can be in your community, it can be in a lot of different forms and fashions. So.
Great points. And my only piece of advice is, as you can see, we have fun with each other, and I see a lot of my colleagues over here. I love what I do, but what I really love is the people I work with, whether they're in my office or my colleagues, my friends, et cetera. And so hanging out with people with positive energy and be a positive energy in it. So I think everything works out great in that regard. So I think we're going to open it up, but I also want to give a shout out to our friends at Heinz. And thank you for judging. And we do a lot of work with Heinz, and Heinz is on the cutting edge of everything, and et cetera. And we've worked together on a project for them, Fat Village, which is really cool. You can Google it. Nothing to do with fat, but anyway. So with that, I don't know, Andrea?
Yeah. Well, I was going to say, rather than try to do questions with a big audience, I'm hoping that the panelists will be able to stay for, 5 minutes or so, and you can come up and talk to any of the ones that you might. They are all exceptional, and they are all highly skilled at what they do, and they are all great representatives of the business school and the University of Miami. And the students here, I know, will all be that of either the university or the universities that they are coming from. So thank you all very much for coming. We appreciate your time here, and we certainly appreciate the panel. So let's show them.